Ripple just made a move that could completely change how crypto connects to the banking system. We're talking US regulators opening doors, major partnerships expanding globally, billions flowing into real-world assets, and institutions quietly building on top of it. So the real question is this finally the moment crypto becomes part of the financial system? Or is this just another headline cycle? Let's break it all down. Quick disclaimer, this is not financial advice. This channel is about understanding what's happening in crypto, the trends, the players, and the bigger picture, so you can make informed decisions. Welcome back to the channel, your daily breakdown of what's actually happening in crypto without the noise. Whether you're brand new or you've been in the market for years, this is where we connect the dots across markets, institutions, and on-chain trends. Before we dive into the news, let's set the foundation because this video centers around Ripple. And if you're new, this part matters. Ripple is a company. Its goal is simple: make global payments faster and cheaper. Instead of money taking days to move between banks, Ripple's tech allows transfers in seconds. Now, XRP is the digital asset connected to that system. Think of it like a bridge currency. If one bank has US dollars and another has euros, XRP can act as the middle layer to move value instantly. So when you hear Ripple is partnering or XRP adoption is growing, what that really means is the infrastructure for global payments is evolving. Now let's get into the first major development. There's a document circulating showing that the Office of the Comptroller of the Currency, the OCC, has clarified rules for national trust banks. Here's why that matters. The OCC regulates banks in the US. So when they update guidance, it's not just theory. It affects real financial institutions. The key takeaway? Banks now have clear authority to engage in crypto-related activities. That includes custody, holding crypto for clients, infrastructure services, and certain blockchain-based operations. For beginners, think of it like this: crypto moving from experimental to recognized. This is another step toward regulatory normalization. And when regulation becomes clearer, institution gets more comfortable. You may have seen posts claiming Ripple is basically becoming a bank. Let's clarify this, because this is where hype and reality can mix. Ripple itself is not suddenly turning into a traditional bank. But what is happening is the lines between crypto companies and financial institutions are starting to blur. When regulations open up, infrastructure improves, and partnerships expand. You end up with systems that look very similar to banking. So instead of thinking Ripple becomes a bank, a better way to think about it is banking is evolving to include crypto. Next big development, Ripple has partnered with Convera. Convera is a major global payments company. They handle cross-border transactions for businesses worldwide. And here's the key. They used to be part of Western Union Business Solutions. So this isn't a small player. This is legacy finance infrastructure. And now they're integrating stablecoin-based payments. What does that mean? Instead of slow bank wires, payments can move using blockchain technology. Faster, cheaper, more efficient. This is crypto being used for real-world utility. You also saw mentions of RLUSD. Let's break that down simply. A stablecoin is a digital asset pegged to a real-world currency, usually the US dollar. So 1 RLUSD equals $1. Why does this matter? Because volatility is one of crypto's biggest challenges. Stablecoins remove that volatility while keeping the speed of blockchain. Now here's the key development. Reports show RLUSD is backed by billions in reserves and verified by major firms. That's important, because trust is everything when it comes to money. So if you're new, stablecoins are how crypto becomes usable for everyday transactions. And for those who've been here a while, this is the foundation for institutional liquidity rails. Now, this is where things get really interesting. Real-world assets. You saw data showing tokenized assets on XRP have grown rapidly, from around 1 billion to over 2 billion in just months. So what is RWA? It's the idea of taking real-world assets like real estate, commodities, bonds, and putting them on the blockchain. Why? Because it allows faster settlement, global access, and fractional ownership. Imagine owning a small piece of a building through crypto. This is the digitalization of traditional finance, and XRP positioning itself in this space is a major signal. There's also talk about institutional trading expanding on Ripple-related platforms, things like access to commodities, gold, silver, oil, unified trading systems, deeper liquidity. This is where crypto stops being just speculation and starts becoming infrastructure. When institutions build, they're thinking long-term, not days, not weeks, years. So let's take a step back and look at the bigger picture. You have regulatory clarity increasing, payment giants integrating blockchain, stablecoins gaining trust, real-world assets moving on-chain, institutions expanding access. Individually, these are just headlines, but together they tell a story. Crypto isn't just growing, it's integrating. So here's where things stand. Short term, the market will always be volatile, but underneath that, infrastructure is being built in real time. Institutions are moving, corporations are integrating, and adoption is expanding. The question isn't whether crypto is evolving, it's how fast. If you found this breakdown valuable, make sure to like and subscribe. And I'll see you on the next one.